been used overseas, just want to focus on the New Zealand scene. And then finally, the sort of changes that we could make in New Zealand society with the introduction of a monetary reform system where government has control of the creation and issue of new money into the economic system. So, firstly, I just want to ask you a question. If you go to a bank for a loan, or if the government goes to the bank for a loan, where does the bank get the money from?
From its computer.
So it has a big computer with a big pile of money in it, does it?
No, that's what it tells you.
Uh-huh.
But it's got a big pile of numbers in it.
International banks? Anybody else?
It creates it itself from thin air.
It makes it itself out of thin air. Any, sorry? Huh? Okay. From its own customers. All right, well, the conventional thinking, the thinking that most people are brought up with, is two of the answers I've had. And that is that the banks in New Zealand borrow it from the international banks so that they've got money then to lend out to their customers, whether the customer is you, the business down the road, or the government that sits in Wellington. And the other thought is, conventionally, that we're brought up with, that when people put money into the bank, into their bank account, the bank then lends out a portion of that money to people who want to borrow it. And essentially, there is a very small amount of truth in that for a very small percentage of what banks actually lend. However, the majority of money is, as the gentleman, our journalist friend here said, created by the banks out of thin air. And that's a very, very difficult concept to get your head around because it goes against everything that you have ever been taught from the time you went to school about how money is created. So, I'm not just going to ask you to take my word on it, I'm going to give you some quotes from some people who should know about how the system works. Firstly, Bank of England. You would think they would know how the system works, wouldn't you? Have recently put out, last year, a bank bulletin. And in it was an article about how the majority of money in the modern economy is created. And they have also produced a video, which is on the Bank of England website, that gives you some detail about that. This is the particular document. And it says, this article explains how the majority of money in the modern economy is created by commercial banks making loans. Okay, sounds all right. However, money creation in practice differs from some popular misconceptions. Banks do not act simply as intermediaries, lending out money that savers have placed with them, nor do they multiply up central bank or international bank money to create new loans. The amount of money created in the economy ultimately depends on the monetary policy of the central bank. So, where do they get the money from? Rather than banks receiving deposits, etc., and the commercial banks create money every time they make a new loan. New money, not money that came from somebody else. So that's coming from the Bank of England. The Reserve Bank of New Zealand, in a letter to a colleague of mine, and there's the Reserve Bank of New Zealand letterhead, says, as you noted, banks do create money and credit. Notes and coins make up only a small proportion of the broader measures of money, about 3%. The majority of money is created by the commercial banks every time they make a loan. That's number two. Number three, the IMF working paper that was produced in August of 2012 says the critical feature of the current economy used in most developed countries is that the economy's money supply is created by the banks as debt rather than being created debt-free by the government. And there's a lot more in that paper that's really well worth reading. So there's another source that says banks create money out of nothing. Reserve Bank of New Zealand, in its bulletin of March 2008, says this: in a modern economy, money can be created either by the central bank, in this case, in New Zealand's case, the Reserve Bank, or by private sector banks. In practice, by far the largest share of money, 80% or more, is created by the private sector banks. Out of nothing. Doesn't say other people's savings that have been lent out. Doesn't say money they've borrowed from the international banks that they lend out. It says created by the private sector institution banks every time they make a loan. So that somewhat challenges your thinking, I hope, in terms of where banks get money in order to make loans. Of course, the next question then is, if they create money out of nothing, out of thin air, in order to make a loan, why are they charging us such an enormous amount of interest on something that has cost them nothing? Remember, they're not paying interest to borrowers, to people who are, to lenders, people who deposited money with them, and then re-lending money out. So it's not as if they've got a cost involved in doing that. It's not as if they are paying interest to the international banks to have borrowed money to lend out to somebody else. They are creating money out of thin air and charging us and the government and the business down the road and the council an enormous amount of interest on something that has cost them nothing. Wouldn't it be lovely to have a business where you could do that? But that's the essential nature of how the commercial banks create money. The essential nature of where the majority of our money, as the Reserve Bank says, about 97% actually comes from. Now, that's all fairly recent stuff, but this is not an unknown fact. People have understood the essence of how the economy works for a very long time. 1932, a little publication produced of a speech made to the New Zealand Parliament by Henry Ernest Holland, who was then the leader of the Labour Party. Harry Holland, as he was popularly known. And in the speech he quotes a number of very well-known, I was going to say people, but institutions really. And here's one. The Macmillan Report, which was a report of the British Committee on Finance and Industry and was set up in November 1929 to report to the British government on banking, finance and credit. And a quote from that report, which Harry Holland quoted in Parliament, is this: "It is not unnatural to think that the deposits of a bank are created by the public through depositing cash as savings. However, the bulk of the deposits arise out of the action of the banks themselves, for by granting loans, allowing money to be drawn on overdraft or purchasing securities, a bank creates the credit in its books with that action. Effectively, it creates its own fund of deposits to be able to then lend." So that's Macmillan Report, British Committee on Finance and Banking in 1929. There are numerous in this publication, and certainly copies of this and some of the other material I've talked about is there if you want to take some later. So, I think, hopefully with that, at least I've established in your mind some doubt about where you thought money was created, how it was created, and in fact given you an idea of where it really does come from. The monetary reform movement in New Zealand started way back after the First World War and came about essentially through the writings and teachings of Major Clifford Hugh Douglas. Major Douglas was a British engineer, although he spent much of his time based in Scotland, but a British engineer who did significant engineering projects throughout the UK and also in other developing countries at the time like Canada, Argentina and in New Zealand. And he was born in date, can't remember, 1879, died in 1952. And he was in the Royal Flying Corps during the First World War, which is where he got the title of Major. And he was appointed by the British government to look into aspects of the aircraft industry, the Royal Aircraft industry. And in doing so, he discovered some rather interesting facts. And the essential part of that was that the costs of the goods going out the door of the factory were much greater than the amount of wages that were being paid to people. And he worked that through to the point where if that was happening in every industry and every business, then there wasn't sufficient in the way of purchasing power being put in the hands of people in order to buy the products that were coming out of industry. And so therefore there had to be a way of increasing the amount of purchasing power that was in people's pockets to enable them to purchase the production that was being made. Currently in our economic system, the same thing applies as it did then. The additional purchasing power is being made up, of course, by the banks, creating money out of nothing and producing it for us to loan, to borrow, at interest and as debt. And as their positive money friends have said, unrepayable debt. And he, on the basis of that, formulated a whole line of economic thinking, and he toured through Canada, New Zealand, and the UK, speaking about his particular thoughts, and he gave evidence to a number of monetary commissions, both in New Zealand and in Canada. And the Douglas Credit movement in New Zealand was born out of his writings and his visits, and it supported very strongly the Labour Party in the run-up to it being elected for the first time in the 1930s. And the Douglas Credit movement became the Social Credit Association and was very, very strong in New Zealand in those early years. In 1953, the Social Credit Association decided that it wasn't making a great deal of progress in advocating for monetary reform because the Labour Party had unfortunately gone away from monetary reform despite the fact that it had implemented some aspects of monetary reform in its first term. And so Social Credit became a political party in 1953 and it has advocated for monetary reform and stood candidates in every election since 1953. It was at its peak, incidentally, in 1981, where it gained 21% of the vote nationwide, prior to us having MMP, of course, and it ended up with only 2 MPs in Parliament, whereas under MMP would have been at least 21 MPs in Parliament. I think we would have had a very significantly different New Zealand, at least economically, if that had been the case. Now, monetary reform has been used, or Douglas's ideas have been used in New Zealand in the past, and were very strongly advocated by the Labour Party, as I said, in the run-up to its first term in government. And this little booklet of Harry Holland's speech contains significant references to the way in which a Labour government would change the economic system, would take control of the issue of new currency and credit away from the banks, and make use of it for the benefit of people and the economy. For instance, one of the things that the Labour Party did in its first term, and in order, and incidentally, to get New Zealand out of the Depression way ahead of the other countries of the developed world, it instituted the use of Reserve Bank credit in order to do significant roading and housing schemes. And this is one page out of a report called State Housing in New Zealand, which was produced in 1949. And it says this: to finance its comprehensive proposals, the government adopted the somewhat unusual course of using Reserve Bank credit, thus recognising that the most important factor in housing costs is the price of money. Interest is the heaviest portion in the composition of ordinary rent. So therefore, the newly created Housing Department was able to obtain the use of funds at the lowest rate of interest from the Reserve Bank, an interest rate of just 1%, which was essentially the processing and administrative costs of the Reserve Bank. It then goes on to say, the sums advanced to the Housing Department by the Reserve Bank were not subscribed or underwritten by other financial institutions. This action showed the government's intention to demonstrate it was possible for the state to use the country's credit in creating new assets for the country. So in other words, the government used Reserve Bank credit, advances from the Reserve Bank, which were not borrowed from international banks or from anywhere else, in order to build significant state houses. And there's a number in there. Anyway, several thousand state houses were built as a result of that. That process was also used to build significant in the way of roading projects to develop the whole of the roading system in New Zealand. It was also used for the start of many of our major hydroelectric schemes and so on. So there was the first use of Reserve Bank credit in New Zealand. A second and very important use was in the building of the dairy industry. The Dairy Board, when it was brought together as a way of marketing New Zealand's dairy produce into initially the UK and eventually across the world, was funded by the Reserve Bank by way of an overdraft at also 1%, so that the Dairy Board would sell its products overseas and pay the farmers immediately for their production, and then pay the overdraft back to the Reserve Bank when the international purchasers of their product paid for the goods. That way there was no lag between the farmers producing the goods and payment coming from overseas for those goods that were produced. And that specific account for the Dairy Board, or the Dairy Industry account as it was called, was through the Reserve Bank advancing new money by way of overdraft, money that hadn't been sourced from any other international source or from depositors, and enabling the growth of New Zealand's dairy industry. And of course, we're now one of the leading dairy producers in the world, with some of the problems obviously that come with that, which we're all aware of. Additionally, the other producer boards that were established over the years, but very similar to the Dairy Board, also were able to use the same sort of facility through the Reserve Bank to enable them to pay growers, for instance fruit growers, for the product that they had produced straight away, sell to overseas suppliers, and then pay back their overdraft to the Reserve Bank as the suppliers paid for those. So there was a second use of Reserve Bank credit in order to build up the primary industry base of New Zealand over time. So it's not as if this whole concept of using reserve bank credit is new. It's not as if it hasn't been used before, but what we have done is we have allowed the private banking institutions, both international and domestic, to take over from what should be a government responsibility to take over the issuing of new credits or new money into the economy, and take a stranglehold on that process, and do it by way of increasing interest payments and create it through debt rather than as credits. So how could that be used in New Zealand today, that process, in order to benefit the country? Well, currently our government spends $12 million every day just in interest on the money that it's borrowed. $12 million every day. So if we take that over a month, for instance, you can do the maths on that. 30 days times $12 million just in interest. So where's that coming from? Well, of course, you all pay taxes. Well, you don't if you can help it, but most of us have to pay taxes. And so $12 million out of your hard-earned money that you pay in tax is going every day, paid by the government, to international banks because they have chosen to borrow from international banks rather than using the ability of our own reserve bank to provide the funds that government needs. Our councils pay about $1.4 million every day in interest. $1.4 million every day in interest. So, out of your rates that you pay to the council, $1.4 million in interest every day is being wasted because it's going to the international bankers. Instead of which, the Reserve Bank could provide those funding necessary for local bodies through creation of new credits at no interest at all. And $1.4 million every day, how much better could our roading be, or our sewage systems, or any of the other?
How many councils?
Is that all councils in New Zealand?
That's all councils in New Zealand.
The total, is that?
Yep.
But that's excluding Auckland, of course.
Well, because Auckland is going to be reaching that total very shortly with the kind of borrowing that it's thinking about undertaking.
Yeah.
So our government is borrowing from the international bank.
Absolutely.
That's why we've got our taxes are all going to pay debt. So the 97% of the money supply is not just being made by local banks out of thin air. It's we're buying thin air at interest from the international banks.
Absolutely.
And our Prime Minister has shares in one of the banks that we owe that debt to. So
Exactly.
he has an interest in us having that debt.
One. Absolutely.
Well, yeah, one on the pledge of pecuniary interests.
Yeah. So, if we just look at one of the things that we could do, for instance, just to give you an example, out of that $12 million every day that we pay out of our taxes and interest on the government's borrowing, just 1 week's interest payments, we could do in New Zealand an extra 4,500 knee or hip replacements. Because a knee or hip replacement costs about $20,000 to be done. So out of 1 week, just 1 week's interest payments, the government could put that money into health and do another 4,500 knee or hip replacements, just out of 1 week's interest. Just to kind of put it into a perspective. That's only out of 1 week. Imagine what we would do with the other 51 weeks worth of interest payments. And that's just looking at a very simple example. So, social credit in New Zealand has been talking about these concepts for some time. It's now starting to get with things like the IMF report, the Bank of England report, and writers like Anatol Kolnetsky, who I don't know if you've heard of, but he is an award-winning journalist and financial economist. He's written since 1976 for The Economist, The Financial Times, and The Financial Times of London. And he is starting to write about the need for central banks to take control of the issue of new credit and new money, and making use of that for the purposes that it should be, rather than allowing the international and domestic banks to do that. And so the whole concept is being, and now with positive money as well, of course, in New Zealand, the whole concept is being started to talk about more internationally. And social credit in New Zealand is continuing and will continue, and hopefully with continued support, to advocate for the use of Reserve Bank credit, in other words, control of the issue of new currency and new credits by the Reserve Bank, not by the private owned international banks. Thank you very much.